In the game of trading, finding the most profitable trading strategy that works best for you is the goal, especially if you're coming into the market as a beginner trader. Unfortunately, a lot of traders go about doing this the wrong way. Whether they focus on strategy that has a 95% win rate, which is essentially the holy grail, or they go from one strategy to another. Now, ladies and gentlemen, in my opinion, a strategy should have the following things. It should be simple, it should be consistent, it should be repeatable, and there should be some aspects of personalization in it. And in this video, I'm going to be giving you the step-by-step guide on how to create a profitable trading system that works for you. Before we dive right into the video, I want to take a moment and announce that the LiveFree FX private chat and community is now live. The LiveFree FX community is a place where you can come and learn and be surrounded by like-minded traders. And obviously myself, I will be in there hosting our live trading and live webinars where I'll be answering members' questions and reviewing trades. We also have our accountability room, which is a space where you can be held accountable for your trading process and your trading rules. If you want to learn more about the LiveFree FX community, click the link down below. When it comes to building a consistently profitable trading strategy, the very first step is to understand a universal law, and that law is you shall reap what you sow. And ladies and gentlemen, the market is not above that law. If you want to reap consistency, you must first sow consistency. Consistency in your learning, consistency in showing up, consistency in your process, in your trading process, and consistency in doing the work to be the best possible trader that you can be. This is how you can become consistent, and this is how your strategy can also be consistent. A lot of traders are struggling right now in finding consistency in the market. This is something I can speak from my own personal opinion because I also struggled with this very important fact, because you're trading so you can make consistent profit. But what I was doing in my own trading process, I came to realize that there was a lot of random elements in my overall trading process, so it wasn't aligned with my goal, which was consistency. If I wanted to be consistent, I came to realize I needed to give consistency back to the market. I needed to be in the market at a certain time. I needed to follow my trading strategy consistently and not deviate from the rules and not add random elements to it or trade it, at different times of the day. This is the very first thing, ladies and gentlemen. I want you to understand this because as we dive into some of the other steps that you're going to need while you're creating a trading strategy, it is important that you keep this in mind, because if you are letting too many random elements into your overall trading, your trading strategy, you're not going to get the consistent results, right? So that's the number one thing. The very first step is to be consistent with your trading process. If you're going to show up and trade the New York session, trade the New York session. Don't trade your strategy outside of the New York session. The next step is your strategy has to be simple and repeatable. If we go over to the chart here, we're going to take a look at gold, and I'm going to go over my accumulation and distribution trading strategy, right? This is one that I have posted on the channel. You have seen me live trade with. You have seen me made profits upwards of 5,000 to 7,000 using this strategy, and I have built, I essentially have made a lot of money trading this particular strategy, right? Now, we're going to dive into this, and the very first thing when you're building your trading strategy is it has to be simple, it has to be repeatable. You have to be able to spot it. So if we go over to the market right now, we can take a look at this. I am predominantly a New York trader, right? So I trade the New York setup. When I come into the market, what I am looking for with this particular strategy is for price to start to accumulate or consolidate. So if we go over here, what we can see is price was moving sideways. But before I actually break it down on the chart, let me just give you the bare bone example of what I am looking for with this particular strategy. Very first thing is when I'm coming into the market and I want to trade the strategy as it appears in the market, what what I am looking for is for price to essentially either push up or push down, but start to consolidate, start to move sideways. I call it accumulation because it is the accumulation of orders that are coming into the market waiting to be distributed. That is why I call it the accumulation and distribution strategy. So what I'm looking for is just sideways movement. This is usually, I'm usually looking for this on my execution time frame, the 5-minute time frame, or even the 1-minute time frame, sometimes the 15-minute time frame, but it can also be executed on the 1 hour or the 4-hour time frame, depending on the time frame. So the very first thing is to have a clear setup, right? You want to have a clear setup. So right here, we got accumulation, price is moving sideways, right? And what we have here is, okay, we got the box. So I usually put the box on there just as a mental note. And what I'm looking for is I am waiting now, anticipating price to break out. I am not particularly trading the market on the breakout. What I would do is if price pushes up, breakout, okay, I'm waiting for a retest. I'm waiting for price to, one, break out with a clear bullish candle if it's pushing up, 1 or 2 candle, and then come back and test this level again. And then I want to see a level of exhaustion, you know, momentum shifting from bearish to bullish, and then get in as price is moving higher, and then look to take profit, you know, at the highs. I usually target the highs. So this is the bare bone of my strategy, right? So now if we go over to the chart so you understand it a bit more, what you see here is I have labeled this the New York setup. The reason why I do that is because you want to come into the market consistently at the same time, and you're looking for your setup at the time that you're trading. Outside of that, you shouldn't be trading your setup. And this setup particularly, I trade during the New York session when there is a lot of liquidity coming into the market. So right here, price is moving sideways, right? This is the 5-minute time frame we're accumulating, right? Price is, you know, obviously took out the high, took out the low, but on the grand scheme of things, it's essentially just moving sideways. So a lot of traders right now are buying and selling, but the reality is what you want is you want price to break out. And this is where we got the breakout that we're looking for. So this is where we got the breakout that we're looking for. Price started to push higher, and, you know, we start to see, okay, wow, you know, ultimately this candle, you know, breaking above, you know, than any other candle, showing signs that price is ready to move higher. So for me, now this lets me know that there's accumulation, the orders that came into the market at this point in time. This move tells me that these orders are looking to distribute to the upside because price is now broken above, but I'm not buying at this level. Sometimes I will, but I'm not buying at this level. What I'm looking for is essentially for price to now trade back down here and get in, you know, right here. And obviously what we see is price continue moving higher. So this is a New York setup. This is one example. If we go over here, what we can see is the same setup in the London session, right? So you want it to be repeatable and you want it to be consistent. You want it to be simple and easy. You don't want to make it overly complicated. And this is something I see a lot of new traders. Oh, you know, I'm looking at the fair value gap, and then I'm using my Fibonacci's, and then I'm, you know, targeting this OBS, you know, order block and blah. There's too many components in the market. It is best to either have a strategy that is simple and create a separation. Maybe have 2 to 3 strategies that are very simple that you use, rather than combining, you know, multiple different strategies and, you know, trying to trade with that. So make sure it is simple and make sure it is repeatable. You can always find it on different time frames, and it apply, the same rules apply, because price action is constant, you know, whether it's on the 1 minute, you know, the 5 minute, the daily, it is the same thing. As we take a look, this is the London session. I don't trade the London session, but if you are a trader trading the London session and you are, you know, essentially creating a system, you know, this would be, you know, something that you can do. It has to, you know, you look at it, come into the market at a time where there is liquidity, and right here is about 2:45 Eastern, which is, you know, around, you know, I would say like 8 a.m. right? During the London time. So this is when liquidity is pouring. This is the bulk of the London session, right? So same thing, you know, price accumulated here, and then we got the beautiful breakout, And then at about 2:45 Eastern, which would be, the London traders are up trading. The setup presented itself here, and then we saw price essentially, go down. And what you can do is, as you take the trade, you go short, you place your stop loss. I usually do a stop loss of 30 pips, but this is 5 minutes, so it allows us actually like 15. So this is about 14 pips, I believe, right? So 14 pips, you are able to now capture 30 pips. So it's about 2-to-1, right? I don't trade in London session, but the setup appeared in the London session, and this is something, if you're a London trader, this is a setup that you can take. But when you are building your system, you want to test it in multiple different sessions, right? When does the move come into the market, right? And how do you trade that? That's essentially what I would recommend you do. You test it in multiple different sessions, but ideally you want to focus on the session that you're trading, and you want to avoid trading your strategy, off your session time. You want to maintain a certain level of consistency, and that's what we mean in consistency in your process. Taking a look at another example, this is the 15-minute time frame on gold. This is a New York setup, same thing, right? So we have price, big push to the upside, lots of liquidity in the market, and boom, all we start to see is accumulation. Now you want to get in, but you don't exactly know what to do, and boom, you get price breakout. And instead of buying the breakout, what I usually just do is wait. And what we see here, if we look at the time, at 8:30 a.m., price gave me my setup. And this is why I talk about, showing up consistently at the same time. Because once you start to show up consistently at the same time, you're able to see the same move. Kind of like it removes a lot of randomness in the market, and you start to realize the market isn't as random as you think. The same things can happen at the same time very consistently, but it also allows you to build a high degree of precision in your overall trading strategy. The tendencies, when price will do certain things. So it's really important that as you're building your strategy, maintain a certain level of consistency. As you find that strategy, right, make sure it is repeatable, and make sure it, you can find it over, and you want to test it, right? So right here, the setup, 8:30 a.m. New York setup. This is where I would essentially, look to take the trade with a 30 pip stop loss. So we go in here. Let's say I get involved, right there. Okay, so place my stop loss at about, let's say, we can say about 32 pips. That's okay. This is the 15-minute time frame, so I'll likely scale down to 1 minute to just be able to get a better precision on my overall entry. But 30 to 35 pips is usually what I do, and then obviously you can ride price for whatever your target is. So usually I target the highs, and from here, the entry point to right there, that would be about 100 pips. If I take a trade run, a position run, I can capture upwards of 150 pips to 200 pips sometimes with this particular strategy. Ladies and gentlemen, what I am doing here is I am showing you the steps to building a profitable trading strategy, and I'm giving you a setup and a particular strategy that I use. And this is gold, but it's not just on gold. You can also see it on other currency pairs as well. This is euro dollar. This is the 4-hour time frame. Like I said, price action is usually the same across the board, but each market will have its own tendencies. A particular strategy might work best in one market than in the other market. And I find that the accumulation and distribution works extremely well for gold, right? So I use it a lot for gold. So right here, but this is euro, right? And you can see the same thing. We got price. Price was accumulating right there. Price accumulating, boom, boom. And ultimately, we got the big break, right? So rather than buying on the break, the smart traders will anticipate the move, right? You wait, and then you get involved in the trade, right? So if we take a look right here, 9 a.m., I believe this is 5 a.m. So it gave multiple opportunities to get involved over, a couple of days. This is the 4-hour time frame, so each candle represents 4 hours. So it's so each candle represents 4 hours. So it's like Obviously, like you're going for bigger objectives, and your risk may likely be a little bit bigger because of the time frame that you're trading. But what I'm showing you is, your strategy. You want to test it across multiple different time frames, especially if you're trading the 4-hour time frame. This is just letting you know that it works on multiple different time frames. So I've talked about being consistent, and I've given you some examples of setups. Like, your setup must be simple. It must be repeatable, right? It must be simple and repeatable. One of the best things I've heard for a trading strategy is you should be able to write it at the back of a business card, and it should essentially just be there. And this strategy for me is literally like a Dumb and Dumber. Like, I'm not gonna make this overly complicated for myself, so I simplified it, and it can go in the back of a business card. It's simple. I can see it over and over again because I have collected multiple samples. Now, the next step is to personalize your strategy. Whether you're learning the strategy, you say, wow, like, this is a great strategy, I'm gonna go try to trade that, right? The very first thing is you want to take it to the charts, right? You want to make sure that you study it, you collect samples. And the samples is where you can personalize your strategy that you learn, whether it's from me or from a course or just something that you see in the market, right? You want to spend time studying it, and over a period of time, you're going to see what works and what doesn't, whether the strategy fits your personality, whether it fits your psychology, and also whether it fits your risk management tendencies. All these things are extremely important when it comes to building a consistently profitable trading strategy. So you definitely want to keep that in mind. So the third step is to personalize it, right? Don't just take my word for it. Go over to the charts, study it, right? Try to get better. Try to make it your own. I spent over $30,000 in my education in, the trading game. Obviously, you don't need to spend that much. I just got to a point where I was buying a bunch of courses from different people and mentorships, right? But I never really found a strategy that someone gave me and really traded that. It didn't exactly work for me. I had to make it my own to some degree, right? So that's the same thing. It may not work for you the way that I have outlined it, but that's where personalization comes into place, right? So your strategy has to be personalized to you. And the last one, to wrap it up, is it must be tested, right? I said that before. You want to test it, whether you're using the backtesting software, or you can essentially do what I do here, which is collecting samples, right? What I like to do with TradingView, and I actually like it a lot better than using the backtesting software, because as a trader, our job has to do with pattern recognition, right? So you're recognizing patterns in the market as they are appearing in real time. So when you come into the market, right, you want to be able to see these moves. And the best way that I have found to build these pattern recognition is doing what I just did here, is going over past historical data and collecting samples and taking screenshots of this and seeing that, because now when it actually happens in real time, I know what to expect and I know what to do. So back test it, demo trade it for a while, and just make sure that it is, it has shown good results, and it is something that you are extremely confident in, and more importantly, you're not going to deviate from it after a string of losses, because that's where a lot of traders burn themselves. When your strategy stops performing based on market condition, whether it's for a week or 2 weeks, you move away from it, right? You start to do something else, and it doesn't work. You will never attain consistency that way. So building a consistently profitable trading strategy, the very first thing, just to give you a recap, is to understand the universal law. And that law is you should reap what you sow. Be consistent with your trading process. Give the market consistency, and the market in return will also give you consistency. Consistency in you showing up to the market daily. Consistency in your process, doing the same thing over and over and over again, and learning from that. If you have too many random elements in your trading, it is impossible to attain consistency from randomness. You're going to get random results. So that's the number one step. The next step is your system must be simple and repeatable. Like what I just gave you here, simple and repeatable. And it should be able to, be at the back of the business card. The next thing is it has to be personalized to you. It must fit your psychology, right? Or your personality, your risk management tendencies, and so on and so forth. You got to test it. And yeah, that's the fourth one. The fourth one is make sure it is tested and it is proven, right? It is tested and proven, and you demo trade it. Ladies and gentlemen, that's the video. Thank you for watching. If you learned something from this video, leave a comment down below. And don't forget to smash that like button. If you took something insightful for this video, your support is greatly appreciated. Thank you so much. And once again, hope you're out there living free. Cheers.